us about such fun time.
Hi.
Hi.
You
Happy
get both
Tuesday.
of us on here today on the same video because we're in the
Yes.
same office. So 2 is better than 1. And let's get into it today and talk about this crazy, crazy market that I haven't seen in,
Yeah. And we hear it, right? We are
Mhm.
hearing it from our clients, from agents, from just all different type of people in the industry as well. I know I've been asked to relock and move files and do all the things, but although we want to do those things, it sometimes just doesn't make sense because
Well, and we're seeing a lot of false advertising, and this
Yeah,
is why we always
a
talk
lot.
about clickbait, because we even got from a very big reputable company an email that said we lower rates. Well, that week we had seen the largest move in rates in probably a year. We had easily gotten back into the 7s. And so it was a huge buy down to get to that. And the reason that we're seeing this is, again, broken record, but we're talking about tariffs. I mean, we're just really in a war of tariffs right now. And some of the stuff has been negotiated and settled down, but it causes market volatility because it causes instability in what's going to happen.
Right.
And the market doesn't react well to instability. So they'd honestly rather know that it's either going to go bad or it's going to go good, because they can't they can't handle that unknown.
Yeah, and I saw that because of this, all the back and forth, and I think we even touched base on it, that like what we're waiting for is some negotiations to happen, right, with the tariffs, and we saw a lot of that last week with I mean, China, obviously we're still it's still up in the air and on where we're at, but with many of the other countries, we got a 0% tariff, right? So that did allow for, what happened was people were taking, their investments from the bonds and putting them back into the stock market. So that's why we saw that jump back into the stock market. But now we're just kind of like, there's still so much back and forth and nothing's stable.
Yeah, and we're seeing like the dollar being devalued a little bit too. And this isn't to scare anybody. It's just anytime that you have a recession, it's actually a good thing. It's part of
the cycle.
Yeah, I mean, the rubber band can only pull so far, right? So recession has to happen. It's part of economics. So it's important. But I'm definitely seeing listings rising, but also seeing pending listings. Like that means that they're under contract, they're go. So I don't think people are scared. They know that they have to buy. I do think affordability is a concern, and I do understand that. Condos are the biggest problem right now. So when you look at this inventory, you have to kind of minus condos from there, especially in Florida, because all these assessments, people just can't afford it.
Right.
They can't afford those higher HOAs. I mean, we've talked about HOAs almost doubled since a year ago. And this is because of state requirements, reserve requirements, and so forth. So it's important to note that when you're looking at pending listings too.
Yeah. And then also condos right now, it's like you just said, they're not affordable, and it's hard to finance. Like, it's not just about the affordability, it's just the financing part of it too.
Because reserves, insurance.
Yes, there's so many other components that we have to look at that are making these condos kind of sit in the market a little bit longer. And it's not because people don't have the money to buy it. It's just people can't. I mean, financing is just impossible for some condos.
It's a very difficult thing. And, pricing is flat, so that they're saying, of course, there's areas in the U.S. that it is rising and maybe a little bit lower, but overall, I think it's pretty flat at this time. And we've seen boomers be the biggest audience of buyers right now too, which is huge.
Yeah, I saw that last week we mentioned how it went from millennials to boomers. Like boomers are the ones out in the market, and something else is the people are staying in their homes a little bit longer now, right? Before it was 10 years, now it's 15 years. So it just shows that people are buying homes and they're staying in them for some time.
Because we've always said in the past, like when you're buying down a rate, to look at a 5 to 7 year return on investment, because people are either staying in their house less than 5 to 7 years, or they're refinancing within 5 to 7 years. But right now, we don't really know what that looks like. So we want to make sure that return on investment's there, because you obviously don't want to pay $30,000-$40,000 for a rate. So it's important to look at that.
Especially, I have clients where their plan is to pay the home off, and in a couple of years, they're waiting to sell another property to pay off this new property that they're buying. And I'm like, I'm not gonna allow you, or I'm not gonna advise you to buy the rate down, because that's money you're never gonna see back.
Exactly.
You're never gonna see that money. So
no, I think that's really important. And just really looking at volatility in the market and just staying informed, I think is really important. Obviously, we were hoping that we would see Fed lower rates. I don't think the market's built in, to be honest with you, at 78% chance they won't. I don't think that we'll see in this May meeting that they do lower rates. It actually probably will not be a positive impact if they do. We have seen some recovery over the last few days, which thank you. Yay. You know, we were hoping to see 7s, but we're at 6.5. So it's part of the market. Like this is part of the market. Don't let it scare you. Don't let posts scare you. Please check. We're happy to give you reality of the situation rather than just what you're seeing on Google, because
it's very different.
Yes, 100%. And like I said, even from some very reputable, I was actually shocked to see that in the middle of tariff wars, rates rising, we're getting something that says should spring buyers by lowering rates. Well, we weren't seeing lowering rates. We were literally in a week of hell, to be honest with you.
Yeah, no, we were just talking about it out here in the office. Should we float? Should we lock? And we're still uncertain on what's going on, but we always hear it on our end, right? If we had a crystal ball, what would it say? Like, we don't even know.
If you like it, lock it, because the good thing about working with a mortgage broker is you're not stuck with that rate. I think that's really important. We are able to renegotiate the rate. We are able to move the loan. We are able to transfer the things. So there are ways that we can protect you, but we're protecting you from the rates going up, because people that didn't lock a few weeks ago, I mean, rates are far worse. So we've got to hope for some recovery.
And it's not always just the rate. It's the costs associated with the rates that I always try to get my clients to focus on, because even if we are able to offer a quarter, less, that cost may be, it just doesn't make sense. And it goes back to the return on investment, right? Like, if it doesn't make sense, why would you do it? So.
Yeah, no, it's super important. So just check with the professional. Sorry, we were a little bit late today. We had a meeting that we had to attend. So we will keep you updated each week. And please, in the meantime, we would love to answer your questions. We'd love to have some guests on here. So if there's anybody that you'd like to see, just let us know. And we will see you next week.
Yeah, see you next week.